All right. Well, good afternoon, everybody. My name is Jason DeBono, Vice President of NewView Trust Company. And today I'm going to be walking everybody through checkbook control IRAs, also sometimes commonly referred to as an IRA LLC. Regardless of the name that it goes by, we're going to talk about what that really means and how that compares to what we would consider the traditional approach to self-directing an IRA and holding the assets directly at the custodian. So we've got quite a bit of info to get through today. I'm sure you guys have plenty of questions as we go through it. You will find a chat option on your screen. We've got too many participants to open this up for audio, but if you have questions, please type those in as we go, and I'll be happy to get those read aloud and addressed and answered throughout the process and presentation today. So without further ado, I'll go ahead and get us started. NewView Trust Company is an IRA custodian. Our trust charter is out of the state of South Dakota. Our processing office where we process our accounts is in Longwood, Florida, just outside of Orlando for those joining us from outside the area. We've been in the business 15 years. We've got nearly $1.5 billion of assets under custody. Our role in this process is going to be similar or the same, whether you choose to own assets directly at the custodial level in a self-directed account, or whether you choose to own them through a checkbook LLC or an IRA LLC. In either cases, either the assets or the LLC still need a custodian on behalf of the IRA, and that's the role that we serve. So just know that no matter what decision you make going forward, NewView is here to be able to service those accounts inside your IRA. So let's go ahead and walk through a couple of slides, and we'll kind of get some information, put some meat on the bones in terms of how this actually works. So checkbook control in IRAs is really around the concept is around giving you or someone you designate the ability to have the direct checkbook authority for that account. It doesn't change a lot of the rules. We'll talk through that, but it's really about giving yourself a little bit more control. So the first thing is the checkbook control doesn't mean anything. It's just a term, and it's an IRA-owned LLC, whether that's owned by multiple participants, multiple IRAs or multiple parties, or whether it's owned by one. The idea is the same. The structure itself allows for quick access to IRA funds, and it allows them to manage those funds in a bank account for the LLC. So rather than managing the account through the custodian, they manage the account through the LLC, which they have control over. And so it gives them obviously quicker access to funds, and it gives them the ability to manage those dollars a little bit easier. And in some cases, that makes tremendous sense. And in other cases, that's not nearly as big of an opportunity. And it really depends on the individual's investment choices and philosophy as to whether or not checkbook control makes sense. So as you can see from the graphic here, the investment opportunities don't change. A self-directed IRA has the same rules that a self-directed checkbook LLC has. So by setting up a checkbook control LLC, you're not skirting or bypassing any IRS rules. The rules of prohibited transactions and disqualified parties are going to pass through to that LLC. So whether you're buying real estate, precious metals, private equity, it really doesn't matter. You can choose to own those directly through the custodian, or you can choose to direct the custodian to invest into an LLC and then have that LLC in turn go and buy the various assets that you choose to hold inside your account. But at the end of the day, the asset type and eligible or permissible investments are going to be the same. So when we talk about establishing a checkbook control account, let's talk through kind of what that means and how that differs. So the first step is to establish a self-directed account with NewView. You've got to have a custodian, whether you buy the real estate directly in the name of the custodian or whether you fund it through the LLC, you still have to have a custodian that holds your IRA and does the annual reporting to the IRS. Second part is you can transfer those assets, mostly cash, but transfer from your current custodian. So if you're moving from Schwab or Fidelity over to NewView, you would move those assets over. There's no tax or penalty to do so. The only time you could encounter tax is if you decided to move pre-tax money into a Roth. right? That's a whole other conversation, but if you're moving from a traditional IRA at Schwab to a traditional IRA at NewView, that's a tax-free transfer. There's no reporting or tax liabilities associated with that. The third step is to establish an LLC. Now, NewView itself as custodian does not establish LLCs. On behalf of our clients, we do have a list of attorneys and groups that we're familiar with that you can contact that can provide that service for you. We do have clients that set up their own LLC, and then we have clients who will utilize their CPA or personal attorney to go through the process. There is no necessary difference, meaning you don't have to go and have some specialist create the LLC, but you should have someone that has some familiarity with what it means for the IRA to be the owner of that LLC. So one key difference is the IRA account owner is the non-member manager, and a lot of times there's the manager of the LLC is the account owner, and they list them as a managing member. And it's important from a distinction standpoint. If the IRA is the owner of the LLC, meaning it owns 100% of the outstanding shares or units interest in that LLC, and I, as the account owner of the IRA account owner, want to be the member, be the manager, I can't be the managing member, because the managing member would mean I am a member. Well, I personally am not a member. My IRA is, so I would need to be listed as a non-member manager. There's small nuances, but from a legal standpoint, there's a lot of attorneys that will suggest that if you don't cross those T's and dot those I's, the IRS, if they ever looked at it, could suggest that you violated a prohibited transaction rule. So again, it's not a specialized type of LLC that you're setting up. You don't necessarily need a specialist, but having someone with some familiarity is an important step in ensuring that you don't step on any landmines along the way. A bank account, once the LLC has been established, can be created by that manager of the LLC, whether that's the account owner, the IRA owner, or whether they designate a third party to be the manager of that LLC. They would in turn go and establish the bank account on behalf of the LLC. At the direction of the IRA owner, which is our client, they're going to direct us to buy the outstanding shares, whether they buy 100% or they buy a smaller percentage of the shares of that LLC. So they would provide us with an authorization form for us to do that. In addition, we will need both the operating agreement of the LLC. So if you're setting this up online and there's no operating agreement, you're going to have to go create one. Most of the attorneys and firms that exist that do this will provide you with that operating agreement, and we'll need that alongside our authorization request. In addition to that, we have a form that we require the manager to sign. Again, that may be the account owner, it may be a third party. We don't differentiate between that, but that form is an acknowledgement letter acknowledging that this is an IRA-owned LLC, and we have some bullet points in there. We want to make sure that the individual that's managing that LLC understands there are rules they have to follow pertaining to the IRA, and that's what that acknowledgement letter does. So it's really 3 documents that we need. 2 of those are NewView forms, an authorization form and an acknowledgement letter for the manager, and then we need the operating agreement of the LLC itself, which is a third-party document that NewView is not part of the creation of. Once that authorization is provided to us, within 48 hours, we will send the funds to the LLC bank account. So if you were to go in and look at your statement, you will now see that you have a $100,000 interest in ABC LLC, or whatever the designated name is of that LLC. We will not keep track of the individual assets of the LLC because we don't know what those assets are, nor are we responsible to manage or report or record keep those assets. So that LLC manager is responsible to keep track of that, and we'll talk a little bit about what responsibilities they'll take on from a reporting standpoint. And then the manager is responsible to make all the investments and keep track of all the activities. So, you know, my typical rule of thumb is very simple. You are doing your job as manager if at any point the IRS were to come and ask what that LLC owns and has done, and are there clear records of that behavior. If you can generate or produce documentation that shows all the money in, all the money out, where it came from, where it went, and all the assets that are owned by that LLC, you're doing your job as manager. If you're not keeping records sufficiently enough to do that, then an LLC or Checkbook LLC is probably not best for you, or you need to hire a third party to manage that, because what you can't do is you can't put yourself in a position where the IRS may randomly audit or may target, and perform an audit and ask for details. If you don't have information to provide them and you can't show what that LLC is invested in or where that money is and have clear paper trail, you could risk losing your IRA because you've not been able to show that you haven't committed a prohibited transaction in that process. So it's one of the things that I always like to caution on is, and I think you'll see this on a future slide, is with great power comes great responsibility. And as the manager, you're taking on the role and responsibility of keeping track of those assets. If you were to buy the assets directly, so not use an LLC and buy those assets directly through NewView as custodian, we would be responsible to produce all of that documentation for the IRS. We would have records of what the IRA holds, where the money went to, where the money came from, and all of the activities associated with that. So just be prepared as the manager of that entity or the person who's designating the manager of that entity, that you're adequately prepared to keep good records. I'm going to pause for a second. I got a couple of questions that have come in. The first question says, who has a choice of the banks? So the manager of that entity would be the one that reserves the right to direct where the bank account was set up. NewView has no interest in that process. If you were to, as the IRA owner, designate a third party as the manager, you may notate in your operating agreement who has that direction, but it's either going to be the client, account owner, or the manager of that LLC. The second question or follow-on question says, who owns 100% of the shares, whether it was NewView or the IRA? So it's actually the IRA, but both names are on title. So the shares will be registered to NewView Trust Company for the benefit of, in my case, Jason DeBono's IRA. So that's a custodial ownership. It doesn't mean that NewView has any ownership. It simply means NewView as custodian is holding them on behalf of the owner, which is that individual's IRA account. So NewView has no ownership of any of the $1.3 billion of assets that we hold today, but we are on the title of all of those assets as a designated custodian. Another question's popped in and it says, is it a single member operating agreement or a multi-member operating agreement? Great question. That depends on whether or not it's a single member LLC or a multi-member LLC. Most commonly in this world, we see them as single member LLCs. So we would see a LLC set up for the purpose of one member, one IRA. In that scenario, it would be a single member operating agreement. If you were going to have your traditional IRA and your Roth IRA both invest, that would be multi-member. So you would have to have a multi-member operating agreement. Or if you were going to have your IRA own a piece and maybe a spouse's IRA own a piece of the outstanding shares, that would be also be a multi-member operating agreement. So it's really no different. The key thing is the ownership needs to be done from the very beginning. So if I'm going to own 50% and my wife's IRA is going to own 50%, then I would want to make sure we did that from the beginning. I cannot buy 100% of the shares in my IRA and then transfer those to my wife's IRA. That would be prohibited. But if we invested in that alongside each other from the origin of the LLC, that would be permissible. It would be a multi-member LLC. We've got some questions coming in, so I'll go ahead and pause and keep reading those. Can unrelated parties have their IRA funds in same LLC checkbook? I'm going to answer that in the manner I think it means, and please correct the question if I get this incorrect. You have the ability to set up either a single member or multi-member LLC. That has no bearing from a standpoint of whether or not it's permissible. As I mentioned, typically you'd want to make sure if it's multi-member, everyone's buying in from the beginning. If you have people buying in after the fact, you start running the risk or potentially can create a prohibited transaction. Not all scenarios do, but the likelihood can occur. So I'll use an example. of a couple different ones, and I may have a slide on this, and I'll just skip it if I do. So scenario one is I have $100,000 in my IRA, and I want to set up a single member LLC for that IRA. So I would set up a single member LLC with a single member operating agreement. I would invest the $100,000 through Newview as custodian into that LLC. And then as the owner, right, on behalf of my IRA of that LLC, I would designate myself or a third party, the choice is mine, as the manager. If I were to have multi-members, so maybe it was my IRA and my wife's IRA, then my wife and I collectively, per the rules of the operating agreement, would designate a manager. That manager could be myself, it could be my wife, or it could be a third party. All of those are permissible options. I could even go further, and I could choose to set up an LLC with my IRA, my wife's IRA, and my son's educational savings account. And we could own it 40-40-20, 50-30-20, as far as ownership goes. And then collectively, per the rules of the operating agreement, the three parties would then designate the manager. It could be any of the three of us, or it could be designated to another third party. So what's nice about this is you have the choice. Just remember, anytime you're dealing with any disqualified party, that choice has to be made from the get-go, and you have to remain constant throughout the ownership. So using the example of my IRA and my wife's IRA, we are considered disqualified parties. We cannot do business together. We are able to own shares of the same asset, but once we invest that money into that LLC, and again, I'll use 50-50 as a simple example. If my IRA owns 50% and my wife's IRA owns 50%, we cannot change that ownership a year down the road. We cannot decide that she's only going to own 30% now and I'm going to take over the 20, because I'd have to create a transaction between my IRA and my wife's to change that percentage. That's prohibited. So a very strong word of caution is when you're making investments into an LLC with parties that are considered disqualified or closely held or related, you cannot commingle or move the money around after the fact. It's all got to be done from the beginning, and it has to keep the same prorated interest. The question is a question about 401ks. I'll answer this question. It's a two-part question, but I'm not going to dig into it just because this is not a 401k conversation or presentation. And we do have a recorded 401k presentation that I believe is on our website if you wanted to go and review that. There is a completely different plan that's referred to as a solo 401k or individual 401k. That plan automatically comes with Checkbook Control. So if you have a desire to set up a solo 401k, you don't need an LLC. It has Checkbook Control automatically as the trustee. Any IRS filings like Form 5500 is all done by the client or someone they designate. Newview does not perform any tax reporting for 401ks. So I'll answer that question, but again, I won't dig any deeper into that. All right, so moving back through the process, I want to walk through and talk about kind of the things to be aware of, both benefits and drawbacks. So I'm a neutral party in this decision-making process. What I mean by that is I don't have a dog in the fight. You can become a client whether or not you're going to buy an asset directly or whether or not you're going to set up an LLC and buy the assets through the LLC. And let's walk through and talk about them. So let's talk about benefits first. So number one, quick access to IRA funds. I mean, that is by far the biggest benefit. I don't typically recommend setting up an LLC unless that's a big piece of what you need. Because you're adding a layer and you're adding some requirements and responsibilities to you personally that really may not be beneficial. So for example, if you're going to buy one piece of real estate, closings typically occur in a 20 or 30-day window. You're not at risk of losing an investment because the custodian's closing on it versus the LLC. If you're buying tax liens and you're going to the courthouse steps and bidding, then certainly that LLC is a huge benefit to you because you have that immediate access to the funds. So it's important to determine what type of asset you're buying in evaluating whether or not the LLC makes sense. The other benefit, my wife's IRA can invest into this LLC, and then we can go buy multiple investments without having to structure each of those investments as multi-owner, right? So there's some major benefits there to multiple ownership. Cost effectiveness. Now, cost effectiveness is interesting because it's on both the benefits and on the drawbacks. So when we talk about cost effectiveness, I want to make sure everyone understands what I mean by that. It is certainly less expensive if you're buying multiple assets, right, to have the LLC model. But it is also less expensive, more expensive to hire someone to mow your grass. But you're paying for a service. And what I mean by that is the responsibilities that NewView has in a custodial account are much higher than the responsibilities that we have in an LLC custodial account. So if you're going to look at this as a way to save money, just remember you're saving money by taking on the work. So you have to ask yourself, do you want to take on the work? So going back to my lawn analogy, you can save money by mowing your own grass, but do you want to go out and mow your grass every week? Or do you like to wake up and know that your grass is always cut and everything's maintained? And yes, you're paying for that, but you don't have the responsibility or the headache that comes with mowing the grass. It's no different in this model. You can save money by setting up the LLC, but do you now want the responsibility of managing all the assets, keeping track of all the income? Are you equipped to do that? Do you have the systems necessary to do that? Because you're taking that responsibility on in an LLC. Not to tell you not to do it, but just be prepared. It's a little bit of, to me, a little bit of a not really an apples to apples when people say it's cheaper. Lots of things are cheaper if they're less work. And in this case, cheaper because they're more work. And in this case, it's cheaper because it's more work. But if you're equipped and aware of those responsibilities, it can be a very cost-effective tool. It provides you full control. So you have the ability to collect the rent, deposit the rent, make the expenses, pay the plumber, manage all of those things from a LLC management perspective that provides a level of control. And then it's also easier for you to access both public and private assets under one account. So you could, under that LLC, not only could you own a piece of property, but you could also go set up a trading account at TD Ameritrade and buy stocks and bonds under that LLC as well. So you're owning both a mix of public and private assets. So what are the drawbacks? You give up custodial oversight. So no custodian, whether it be NewView or any of our competitors, is responsible for your investments, right? That's the self and self-direction. However, having a custodian that you work through for your purchases allows you to talk through what you're doing. It allows you to send in paperwork, and it allows that to be reviewed. So you have that custodial oversight. If you're going through the LLC model, you're responsible as the manager to review the transactions, make the investments, and handle the purchases. And so you lose that ability to necessarily, not to say you can't call us and ask questions, but you're not going to have the same level of oversight that you would in the LLC model. Another big drawback to a lot of people, not everybody, is that the IRA rules are still in effect. So I meet lots of people that think the LLC approach is the best way to buy investments in an IRA because then they can do the stuff that they couldn't do directly. And that's simply not true. If your IRA cannot buy a house that you're going to live in directly, it cannot buy it indirectly through an LLC. Or if you wanted to use your IRA to invest in your own business, you can't do that directly. Setting up an LLC isn't going to allow you to do it indirectly, right? Those rules still apply. It's a lot easier to commit a prohibited transaction. We see it all the time. There's plenty of stories that I can share with you where people have used their IRA to go out and they've taken a distribution directly from the LLC and never reported it. They didn't route it through the custodian. They took out a loan and it wasn't non-recourse. They personally signed for it, and they've gotten themselves in trouble. So it's not to say you will get in trouble, but you're out operating independently, and you need to make sure that you're aware and educated of the rules and willing to learn and keep up with those to make sure you don't violate any of those rules. You also have full record-keeping liability. So, you are fully responsible to keep track of every dollar in, every dollar out, and make sure you understand exactly what the LLC owns at all times. And while that's not rocket science, it's also not something that's easy. You may not have a system to do that. So you may have to develop a system. You may need to go out and purchase something like QuickBooks, or maybe you're really good in Excel and try to manage it there. But you need to have a clear and accurate record of every activity in that LLC. NewView does that on our accounts that we hold directly with assets, but in this case, we would only do that for stuff that we get from the LLC. We would not keep track of the assets of the LLC, nor will we track the income, expenses, et cetera. So you need to make sure you have the necessary files, paperwork to support it, and the records associated with it. And then LLC filing fees. You know, every state is different, and we see this a lot. People have said many times that, you know, I'm going to go buy a piece of real estate and I'm going to set up an LLC because it's cheaper. And the reality is they actually pay more. There are states where LLC filing fees can be very expensive. So you need to be aware that while you may reduce or eliminate a fee on our end, you may pick up LLC fees that cost you more in the long run, not less. So just be aware of that. I've got a couple of questions that have come in here, and let me just, one question says, what is PT on the slide under drawbacks? And that's prohibited transaction. I apologize for the acronym, but it wouldn't fit otherwise. The question, and I'm going to read it, states, can I use both the Checkbook LLC and use present IRA with NewView due to type of assets? And I apologize. I'm trying to read that, and I can't figure out what the question is that's being asked. If you'd be kind enough to whomever asked that question to go ahead and restate that, because I'm having trouble picking up exactly what you're trying to get to there. And I'm happy to here, and if I can get that reworded. So what are the rules that apply to that LLC? If you recall in the last slide, I mentioned that the rules pass through to the LLC. So the couple of things that you have to be aware of. Number one, the LLC cannot purchase life insurance, nor can it purchase collectibles. That tends to be a pretty easy thing to steer clear of. It's really bullet number 3 that you have to be the most mindful of. I would encourage you to go onto our website, go onto the IRS's website, and pull the information. Publication 598 is going to give you, some insight. I believe it's 598. I apologize. I may have my lines crossed. I believe it's 408 that deals with who disqualified individuals are. Disqualified parties, as a general rule, are you, the IRA owner, your parents and grandparents, your children and grandchildren, and the spouses and businesses owned or operated by any of those parties. So your parents, right, grandparents, any of their spouses, your children, grandchildren, any of their spouses, and by extension, any businesses that any of those groups own or operate in a significant capacity. So if your son owns 2%, of a business, it's probably not disqualified because it's such a de minimis amount of ownership. But if your son owns 50% of a business, your IRA cannot do business with that business. So if it was a construction company, your IRA or your IRA's LLC couldn't hire your son's business to come in and rehab a house, because your son would be gaining direct benefit by virtue of being the majority owner of that entity from your IRA, even though it's indirect through an LLC. So please, if you're going to go the LLC route, make sure you have a clear understanding of the way that disqualified parties work, and you're prepared to manage that directly. Before I get to this, so it says, put easier, assets to track and account in Checkbook LLC, harder asset to account and track in NewView. So I think what the question is if you have a NewView account, can you have an LLC that owns some of the assets and then have other assets held directly by NewView? And that's a great question, and the answer is yes. And that's not uncommon. So if you wanted to buy set up an account, let's say you've got $200,000 and you wanted $100,000 to go and invest into an LLC that was going to own maybe some tax liens and some other assets that really required the LLC. And then you wanted the other $100,000 to own, let's just say, 2 mortgage notes at $50,000 each. You could own the mortgage notes in the same account as the LLC, and then the LLC would subsequently own the individual assets separately. So you could certainly manage that and do that, and we can talk off track about that, but that's a great question, and yes, it can be done. What does it cost to self-direct? So the fees are pretty simple. It costs $50 to open the account, and this is for the LLC. So we charge $50 to set up the account, which is waived by your attendance today. It costs $95 for us to fund the LLC. Now that we do not set up the LLC, we talked about that, but once you set it up and provide us the necessary authorization, it costs us $95 for us to book that asset and send the funds to the LLC's bank account. And then we charge $295 a year to provide the custody and IRS reporting for that LLC. So the LLC could own 2 assets or 2,000 assets, it wouldn't matter to us. And the LLC could have $2,000 or $2 million, it wouldn't matter to us. The $295 is your annual fee for us to keep records of that LLC and report back to the IRS annually. As far as setting up the account, remember, whether you choose to self-direct or not, you still need a self-directed, or sorry, whether you choose the LLC or not, you still need a self-directed account, and we can set that up pretty easily. You can do that online. It's important to note there is a 7-day rescission period with IRAs, so from the time that you establish the account at NewView, we cannot make any investments into the account, whether it be through the LLC or directly, for the first 7 days. So for those of you that are looking at assets, that are coming up quickly, make sure you give yourself enough window there. And then we process the transfers, and we'll get that process moving right away. We don't wait 7 days for that, but just for the investment side of it as well. Waiting to self-direct is, it depends on what you're doing today. We encourage all clients, if you believe that self-direction is the right tool, get set up and figure out where you want to go and invest. It's generally best to understand your investment, at least philosophy or choices, not so much your individual investment decisions, before determining that you need the LLC. Because for some assets, you may not want the LLC or may not need it. So it is important for you to think through that process first. But if you know that you want to go invest into real estate and you think that the LLC makes the most sense for real estate assets, then get the account set up, start the paperwork on the LLC side so that you're ready to go when you do come across the right investment. So I will pause for questions. We are about a minute over our commitment of staying within 30 minutes. So now would be the time to ask any final questions as we wrap up the webinar today. So the question is if the investment is a cash transfer from an IRA to the LLC, is there still a 7-day restriction? Is a 7-day restriction a government limitation or a rule NewView follows because of the rescission option? So the first piece is the 7-day rescission applies only to investments made at the IRA level. So if you were to open an account today, which is Wednesday, 7 days, and it's calendar days, not work days, would be 7 days would be next Wednesday. That means that you could not make we would not process an investment, different from a transfer, but we would not process an investment until next Wednesday. We will process movements of money, transferring money in, taking in contributions, rolling over old 401ks, all of that stuff can occur. But the initial investment in the account cannot occur for 7 days. That is not a NewView requirement. That is a requirement or an IRS rescission period. Most, so far as I know, are all IRA custodians, especially on the non-traditional side, follow it simply because we have no way to go peel the money back once we send it to the LLC, right? So if we send it to the LLC after day 2 of the rescission period and you say, I don't want my IRA, NewView has to give you back your money. Even though we don't hold it, we still have to give it back to you. So Schwab's, Fidelity's, they may forego the rescission period because they're the custody of securities. And if you say, I don't want this account, give me my money back, they're likely just going to write you a check and liquidate your securities. They're not at risk of not being able to peel that money back. So all the IRA custodians in our space, there's not a ton of us, all follow that 7-day rescission period. Once you're past day 7, we can send the money to the LLC. We can send it directly to an investment. There's no additional clocks that occur, but it's just 7 days from the time that you sign your application with NewView till the time that your first investment can be made. I've got a question that says, if my IRA owns 50%, my wife's IRA owns 50% of the LLC, is there a fee to move future annual contributions from both IRAs from NewView to the LLC? So this is a great question because it's going to allow me to address a couple of topics. So first of all, if you make the investment 50-50, your IRA and your wife's IRA, that split has to remain constant for the life of that LLC. So subsequent additional funding. Number one, we encourage all of our clients to talk to their legal counsel about whether or not there's any IRS issue with adding future money to the existing LLC. There are some schools of thought that say once it's funded, you cannot add money to it. And there are others that say once it's funded, as long as you fund it in the same prorated percentage by the same parties, it's permissible. Because the IRS does not draw up language around the rules of owning an LLC and an IRA, there is no predefined answer. So we do not pass judgment and say it's legal or illegal because it's not expressly identified in either case. So we make sure that from a client standpoint, you understand what that means. To answer your question on how it works and what the fees are, you have to fund the same amount. So if you're going to own 50% in your IRA and your wife's going to own 50%, and you each make matching contributions, you can then turn and add those matching contributions to the LLC if you believe that's permissible. Just remember, if your contribution is higher, maybe you're over 50 or your spouse is over 50 and the other party is not, and you're putting in $6,500 and the spouse is putting in $5,500, that's not 50-50. That would be a disproportionate amount of money added to the LLC. That would change the ownership between the parties, and that's prohibited. So you are committing from the day that you set this up and draw a line in the sand, 50-50, 60-40, 80-20, it doesn't matter, that you are going to make the same pro rata distributions and contributions to that LLC. So just be mindful of that. We do have clients that do it. You certainly can do it, but that's something that you need to make sure that you're well aware of from a standpoint of not of contributing in a pro rata manner, and then understanding the additional contributions and what that looks like. From a fee standpoint, we charge $5 to add additional funds if it's a check, and we charge $30 if it's a wire. So, and $5 if it's an ACH. So you don't have a transaction fee that occurs in that additional funding. So it's not it's not going to be cost prohibitive on our end to do that. Is there asset protection investing inside the self-directed checkbook account? I can't answer that because I'm not an attorney. I'll tell you what I've heard. The short answer is, as a general rule, there's no additional protection because from this standpoint, if you have an LLC that owns 5 properties and someone slips and falls in property A, they can sue the owner and they can go after whatever that owner is, and that's that LLC which owns all 5 properties. So it's all at risk. If you own the same, because an IRA is considered a trust, that trust itself has a level of protection around it. So if someone slipped in property A held in the IRA, as a general rule, and unless there was something that occurred that allowed them to go beyond the IRA, they can only get access to what's in the IRA anyways. So I'm not sure there's additional asset protection unless you're going to go set up individual LLCs for each individual property. But that's something that we recommend talking with legal counsel on. We've heard different scenarios. We have clients that own multiple properties in multiple IRAs. So we have clients that own a property in IRA 1, they set up IRA 2 to buy the next property in IRA 3. They don't use an LLC, they just set up separate IRAs. And their logic is if someone falls in IRA A, that's the owner. They can't sue IRA B or go after the assets of IRA B because it's unrelated to the property that's owned where the lawsuit occurred. So hopefully that answers that question. Let's see here. I've got a couple questions about setting up meetings or what it takes to set up appointments to move funds and get things set up. I'll answer that generally. So you have the telephone number there. When it asks if you're an existing client or a prospective client, I believe it's option 2. Push that and you'll get to our sales team. That's going to give you the easiest access. You can let them know you were on the webinar. Someone from our sales team should be following up as well with you guys throughout the next week. But if you want to be proactive, you can dial that number and speak to anyone on our sales team and let them know that you're interested in the checkbook control or the standard custody. Either way, we can walk you through the specifics of your transactions and how that may look for you. So I think I have addressed all of the questions. So I will, at this point, I want to thank everybody for joining us today, and I really appreciate the dialogue and the questions that were asked. It certainly helps make sure that the discussion is filtered through the lens of what you guys want to hear in this process, not so much what we think you want to hear, and that's our goal. We stand by as willing and able custodians that are eager to assist. We love you self-directing, whether you choose to use the LLC or not. We'd love to have you as clients, and we'd love to have you out there taking control of your retirement. So on behalf of the entire NewView Trust team, thank you very much for joining us today, and take care.